My name is Stephen Jeske. It's great to meet everybody virtually. I'm a managing director in the TMT group at GTCR. A little bit of background on me. I went to University of Illinois undergrad, started my professional career at Bain & Company Consulting. I spent a couple years at Bain & Company, and then got my start in private equity at Bain Capital out in Boston. I spent a couple years at Bain Capital. Went to business school from there at Harvard, went back to Bain Capital for a couple of years, and then was fortunate enough to come back to Chicago, where I'm from, and join the GTCR team about 10 years ago now, at the beginning of 2011. Other than our day job, when I'm not doing this, I'm chasing kids. I have 4 girls, the youngest of which is 2, the oldest of which is 9, and 2 in the middle. And so between private equity and chasing kids around, keeps me plenty busy. So with that, I'll pass over to Sean to introduce himself, and we'll go from there.
Great. Well, good to be with everybody. Thank you again to Wave for inviting GTCR to be part of this. We're thrilled to do it. Very quickly, I joined GTCR about 20 years ago. I am a partner in our healthcare group. Healthcare for us is pretty broad. We cover everything from medical devices and pharmaceutical products and life sciences to diagnostics and provider businesses and payer businesses. So it's a big active effort for us. Prior to GTCR, I spent a few years at the Boston Consulting Group. That's where I started my career in Chicago, which is where I'm from. And since Stephen went there with the kids, I too chase 4 kids around during COVID around the house while trying to work. I've got 3 boys and 1 girl. I'll talk a little bit about the firm history and strategy in a second, but let me hand it over to Jess and Bobby to introduce themselves as well.
Sure. Hi, everyone. I'm Jess Bossman. I'm an associate here on the healthcare team. Just joined this year, and previously before this, I was over at JP Morgan as an investment banking analyst in the Diversified Industrials Group here in Chicago. I as well am from Chicago, just outside in the suburban area. And I'll turn it over to Bobby.
Hi, everyone. My name is Bobby. I'm also an associate here at GTCR in the TMT group, working with Stephen. I also joined this summer, came from JP Morgan as well, from the energy group in New York, and originally am from a suburb of Milwaukee, Wisconsin. Great to be here today and talking with you all.
Great. So maybe we'll jump forward. As Stephen said, we'll start with just a little bit on who we are at GTCR and our investment strategy, and maybe we could go through this pretty quickly and get to more of the content and then to Q&A. So I'm looking at page 6 of the material, so 2 forward. Just quickly, GTCR is a Chicago-based private investment firm. We've been in business 40 years. This is actually our 40th anniversary of our first fundraise. Our first fundraise back in 1980 was a $60 million fundraise, which actually, I'm not sure if this is really true, but everybody is fond of saying and takes it as a given that $60 million capital raise in 1980 was at the time the largest dedicated pool of committed private equity capital that had been raised in the United States, which is pretty interesting. And this morning, just a few hours ago, we announced that we had just raised our 13th private equity fund, which is a $7.5 billion fund. So we've come a long way. So our slide here is a couple days out of date, but our 13th fund is $7.5 billion. We're based in Chicago. We've got a little over 50 investment professionals, and our total staff is roughly around 110. We have traditionally been, and we are still today, a partnership. The way a lot of these private equity firms started in the late 70s and early 80s. So I and Stephen and our partners own and operate the firm. We've had fortunately, a lot of organizational consistency over time. Those of us, the 11 of us managing directors, as we point out here, have averaged about 15 years at the firm. So quite a lot of history. Those of us at the firm today, by and large, have invested the 7th, 8th, 9th, 10th, 11th, and 12th private equity funds at GTCR. Our approach to private equity is what we call the leader strategy. And basically, this is what we've been doing for the 40 years. We didn't really call it the leader strategy. We didn't quite have that moniker or the trademark until about maybe 10 or 12 years ago, where we really tried to sort of codify and capture everything that we had been doing for the prior 30 years and the last 10 years. And we'll talk a little bit about that. Just jumping to the next page on 7. First of all, we primarily invest in 4 areas of the economy: tech, where Stephen and Bobby spend time; financial services; healthcare, where I and Jess spend time; and then growth business services. So this is roughly maybe 2/3 of the economy. So it's not the entire economy. Obviously, you'll see there's things missing. You know, we've never really been investors in the energy space. We've never really been investors in the discretionary consumer space. We've never really invested in retail. Certainly more industrial part of the market or basic materials, other areas we haven't invested in. So we're not really kind of all things to all folks. There are 4 areas of the economy that we spend time in. These are the areas where we've had success over the 12 funds. We've made a lot of investments. We've built relationships with executives, with investment bankers, other deal intermediaries, diligence resources, and so forth. So we've sort of stuck to our knitting in these areas. And as I walk through the strategy, I think it'll make a little bit more sense why we tend to focus deeply on certain areas. So jumping forward to page 8, this is just nothing more than a snapshot of some of the businesses that we own today. Obviously, things like technology and software businesses. The one MBI there that's under TMT is one that Stephen works very, very closely with. It's in the rural cable space. We just sold half that business to a publicly traded company, and I think we'll cover that a little bit more this morning, but it's been very active. The lower left is healthcare, and as you can see there, although I'm not sure you can read all the logos, we've got a pharmaceutical business, a life science tools business, 2 med tech businesses, a healthcare IT business, and a pharma services business. So really investing across the landscape. Maybe jumping forward a little bit to page 10 to talk a little bit more about the leader strategy. So as I was alluding to a minute ago, it really starts with domain expertise. The way we operate, we really go deep in sectors. Some people actually call us sort of a fund of sector-specific funds. I've heard people describe it that way, because whether it's business services, technology, financial services, or healthcare, we've got relatively large teams that really, really go deep in these areas. So we're trying to develop our own points of view around these sectors. We're trying to develop investment theses and track different themes. We're not only looking at interesting companies or trying to identify interesting companies, but we spend quite a lot of our time, more than folks may realize, just trying to find really world-class management teams, folks that really have a demonstrable track record of building businesses and creating value, real experts in the field. And as we're bouncing around these industries and trying to come up with investment ideas and companies to invest with, we're spending lots of time, certainly in a pre-COVID world. It's changed a little bit now, but in a pre-COVID world, we're spending lots of time doing lunches and dinners and meet and greets and walking trade show floors and conferences and all the things you would think about really to meet exceptional leaders. And as we're doing that, we're refining our thinking about these spaces, trying to find new kind of sub-industry verticals and new investment themes. And then as we think about, that's all well and good. So you've got good domain expertise and you're rooting around in areas that you like, where you think private equity capital can generate attractive returns. But sort of what's next? And what's next is we're typically looking for platform businesses that we can transform. And whether it's MBI or Regatta or Mirabai Life Sciences, you saw in the prior couple of pages, we're looking for situations where we can underwrite not only growth, but the ability to potentially put more capital into these businesses over time and really transform them, make them to be much better businesses, bigger, better. And better can be, better returns on capital, better margins, better or broader geographic reach, a broader product portfolio, better vertical integration, better customer mix, whatever the case may be. Everyone's a little bit different. But if you were a fly on the wall in our investment committee, you would see when we're backing a team and looking at a platform acquisition, most of the discussion in that room is, what can we make this? What can we make this over the next 5 to 10 years, with the idea that we can build something that doesn't really exist today and create some scarcity value that maybe the public markets or another private investor or a corporate buyer might be interested in. So that's really the core of what we do. As a firm, we're very bottoms up. We're kind of a research-driven, ideas-driven investment shop. We root around these industries looking for not only interesting ideas and businesses, but really looking for great people with whom to partner. We're big believers in the notion that if you get into business with the right folks who have the right track record, history, who've created value, and who are going to be good, honest partners for you, you're giving yourself a lot better odds of being successful. Quickly on 11, a lot of times people ask us, okay, that's all well and good, but in practice, tell me a little bit about what you're doing. What's the profile of a typical platform acquisition, and what specifically are you doing to quote unquote, transform these businesses? And I would say the platform businesses all look a little bit different. I'd say one common theme, though, is that they do tend to be a little undermanaged, whether that's because it's a founder-owned business and it hasn't really had professional management, or whether it's a corporate carve-out, or whether it started as a very small business and it got bigger, but never really brought in kind of that world-class experienced management team that could take it to another level. I'd say the most common theme is that they tend to be a little undermanaged businesses. We tend to look at them and feel like there's several things we can do to the businesses to make them not only bigger, but better. Sometimes, probably about 40% of the time, we may be backing the incumbent team. And in those situations, usually a team has done really well with a business, but they've sort of run out of capital. Maybe a corporate parent is not interested in putting more money behind this division or business unit, or they've had a smaller, closely held group of owners or a smaller PE firm, and they've really run out of access to capital. So that's pretty common as well. In terms of the transformation itself, as we point out here, we tend to be fairly acquisitive with the businesses that we own. I think the stats are today, it's something like an average GTCR portfolio company might do 7 or 8 follow-on acquisitions during our period of ownership. That's very common. And in some cases, it can be dozens, quite literally dozens of follow-on acquisitions. So that's very common for us. And we like the idea of putting more capital behind our teams, behind businesses that we know to grow those businesses. So let me pause there. Let me turn it back over to Stephen. And certainly at the end, when we open up for Q&A, we can come back to any questions about our strategy or our history or what we're doing in the market now. But Stephen, I'll kick it back to you.
Perfect. Thank you, Sean. So I'll just real quick, if we flip to slide 13, I will hit on the kind of private equity industry overview real quickly here. I mean, the main takeaway is, to the extent that you want to be in the private equity industry, it's a growing industry. Whether you measure it by number of firms, so the blue line on the bottom left, whether you measure it by amount of capital that's been raised to go invest, which is the top left, whether you look at assets under management, which is the top right, it's an industry that has grown exponentially over the last 40 years, as Sean said, since we started GTCR in 1980, and that trajectory has certainly continued over the last 10 to 15 years. And the bottom right here, all that is to say is that as there continues to be a lot more capital come into the space, and as interest rates remain low, prices have gone up. But that notwithstanding, we think there continues to be a tremendous amount of opportunity, and we think it's a tremendously fun space within which to work, and lots of opportunity for people that want to get into the industry over time. If we flip real quick to the next slide, sometimes there becomes a little bit of a blurring of the lines across when you're talking about private equity. What are you talking about? How does that compare to other types of financial investing? Certainly, to some extent, the lines blur across asset classes, maybe get a little blurry over time. But generally, as we think about private equity and leveraged buyouts, we're looking to buy companies sometimes as small as a couple $100 million and sometimes as large as many billions of dollars. We've got, if you look across the portfolio, some things that are very growthy, and we have things that are very stable and more GDP-like in their growth. But I'd say probably the single biggest thing, or the biggest differentiator between kind of where we delineate between ourselves and something like venture is, we're generally not taking business risk. As Sean said, we're going out and finding and betting on great teams. We're buying businesses with proven business models. It may take a lot of work, and most of the time it does, to help to transform those businesses, invest, whether it be organically in R&D or sales and marketing within the company, and it may be to go do inorganic investment. But generally speaking, as we think about the things that we look at, kind of spans the gamut of size, but we're looking to invest in things that have some type of proven business model that we can kind of latch on to. So with that, we can flip 2 slides ahead. We want to spend a little bit of time, talking about the career trajectory inside of GTCR, and every firm is a bit different, but I make the kind of broad assertion that I think in terms of the roles and responsibilities that I will talk through here, it's relevant to some extent across kind of the entire industry. So I'll spend a fair amount of time on this slide, and as we get to the end, as Sean said, with Q&A, happy to answer any other questions. So As you then start to progress, and kind of the core of our pre-business school program is the associate program, and you know, this has been consistent at the firm kind of as long as I've been there. We've evolved it over time a bit here and there, but the associates are the lifeblood of our firm. Today, it's a 3-year program. A few of those associates are people that have come up through our analyst program and get directly promoted to associates, as well as we go out across the investment banks, consulting firms, some of the other big corporations to look for, you know, the best and brightest and most eager and interested in private equity to come join that program. You know, generally, as Sean alluded to, our 4 industry groups, we're generally hiring 7 to 8 associates per year. It kind of works out to, you know, a couple per group. Throughout that 3-year program, your first year kind of looks like the an advanced analyst, in the sense of you start with owning very discrete pieces of work, learning the process, learning the deal process, kind of soaking in a lot of information, and just getting comfortable with how the process works. As you work throughout the associate program, you start to take more ownership kind of over both the diligence process and generally trying to start to build some of your own domain expertise and help your teams really build subsector expertise. And I'll get into that in a little more detail through an example later on. For a subset of our associates, we offer the opportunity for them to go to business school, or we sponsor them to go to business school, with in return them committing to come back to GTCR as a vice president post-business school. And then generally the track from there is, you know, and this is, these are all ranges, but ends up being a couple to 4 years as a vice president. You should think about that part of your career is going from owning pieces of the diligence process to really, by the time you're a 3rd or 4th year VP, really running a deal process. So managing everything from the entire diligence process to all of the third-party advisor work that's going on, and really being the day-to-day deal quarterback on a acquisition opportunity. Again, at the same time, throughout our entire firm, we're trying to build domain expertise. As you start to get into those VP and director roles, you're spending more and more time trying to build executive relationships, whether it be for opportunities that we're thinking about right now, or whether it be for things that we think may become available in the future. And then as you kind of work your way up, you know, across the director, principal, managing director level, it really, I describe everything as being on a continuum, and you start to move down that continuum towards being focused on the couple of real big things that matter on any deal, and allocating a lot more of your time to domain expertise, idea generation, and a key part of what we do, again, what Sean alluded to, is going and meeting with executives, building those relationships, creating long-term opportunities for us to partner with, you know, proven executives, you know, over time. So that's kind of the quick overview. If you flip to the next slide, I'll try to bring that to life a little bit with an example. So, you know, Sean mentioned MBI up front. I'll just give you a little bit of the high level of the deal, and then we'll kind of go into how an associate and a VP would kind of work throughout the course of the deal. So MBI is a good example of what we do. We, going back 10 years ago, started to build a thesis around rural broadband. So investing in cable systems in rural markets, kind of in the middle of the country. So think lots of 2,000 and 5,000 and 10,000 person towns. For some more detail than we need to get into here, but our basic belief is that coax or cable companies were best positioned to be the broadband providers to those towns. And as is typical, when we start to build domain expertise, we started looking at a number of businesses that were for sale in the space. During that process, we also said we need to identify a CEO partner. So we started to meet a bunch of executives. And then through that, we actually were able to find a partner, CEO partner, a guy by the name of Phil Spencer, who's now been a successful partner of ours for 8 years at this point. And we were able to identify some assets that we were able to buy with Phil. And we ultimately built that business. That was a business called RBI instead of MBI. We're not real creative with our naming. And we had a successful run with Phil on RBI. And then we did the same thing with Phil on MBI here, which is we partnered with Phil. We went out and found some assets to buy. We put those assets together. We've continued to look for M&A. Phil's operated those assets. We've invested a lot of money in the network. And Phil's turned it into a very successful investment for us. If you flip to the next slide, I'll talk a little bit about what that means on a day-to-day basis from an associate and VP perspective. So if I go all the way back to the beginning of what I just described, the first thing is we started to have a thesis in the space was we need to understand the space and we need to have a CEO. And so as an associate and as a young VP, you're focused on combing the country for who are the best executives in the space. How can we get in contact with them, start to build a relationship, understand how they think about things? How do we diligence the industry? How do we understand what the key drivers are, both on a macro and micro basis? What's the competitive landscape look like? Do we think this is an attractive industry for us to invest in? Is we actually got close to making that first investment? If you look at the top left here, we then have to go raise debt to be able to buy the company as well. We have a whole internal investment committee process. You're involved in pulling together all of our analyses and putting it into a package that we can walk our investment committee through in a linear and logical way to get everybody to understand the opportunity and debate and discuss the opportunity. Once we complete the first acquisition, so if I'm starting to move to the middle here, the inorganic kind of growth initiatives that we've done. So after we made the first acquisition, we made a couple of other acquisitions quickly thereafter. In this situation, our associate and VP team that works on cable, they're the M&A department for MBI. They really are the arms and legs of kind of getting through the key diligence, and we work closely with our CEO partner, Phil Spencer, in that. So again, a lot of similar stuff to what we were doing with the first investment, which is what's the competitive landscape, what's the state of the business we're buying, kind of detailed financial analysis and models. Once we get a bunch of the pieces put together, then we got to make sure it all runs smoothly, and we work with our teams on both any big operational things where we can be helpful, as well as we need to do continued kind of monitoring of the key metrics. And we spend much time up front with our executives. What are the key KPIs, the key performance indicators that we're focused on? And so again, as an associate, you spend a bunch of time helping to agree on what those are and tracking and monitoring those key KPIs over time. And then as we get to either the middle or the end of a deal, as we think about opportunities to either recap the business or sell a piece of the business or sell the entire business, generally as an associate and as a VP, you're as close to anyone to the story. You understand all the ins and outs of the numbers and can tell the story better than anybody. And so you play a big role in putting together both financial models that we use to support the materials we put together when we're selling part of the business, as well as any marketing materials. And that could be whether we're going to sell the entire business or whether it be we're going to lenders to look to recap the business. So that's kind of the timeline of the things that you do. And again, as we get into Q&A, people should feel free to ask questions specifically about this or just in general. So that will flip to the next slide. So, and I'll open it up here to my colleagues as well. I'll kind of kick it off if you flip one more slide. We want, in addition to kind of talking a little bit about GTCR and roles and responsibilities, we want to spend a little bit of time, talking about, we've all had the opportunity to interview a lot of people, and we've also all done a lot of interviewing. And so, our advice is probably about worth what you're paying us for today. So you should filter it with other advice that you get, but we're happy to kind of provide a few of our thoughts. And, the biggest thing that I tell people is be authentic. That anytime I sit down with a candidate, what I'm most interested in understanding is who they are, what gets them excited, and why they want to do what they're interviewing to do. And in this case, why do they want to do private equity? And for a lot of people, they've wanted to do private equity for a long time, and that's fantastic. And if that's you, that's great. And if it's something that you kind of just came about to have an interest about over the course of the last couple of years, that's a perfectly fine answer too. I think what is key is generally people in our industry, and I think broadly, but specifically in our industry, we spend a lot of time trying to read people. And so your authenticity, will show through. So that's kind of the number one thing that I would suggest is come across as authentic. Don't be worried about if there's a right answer. The right answer is to say kind of what you feel and what you're hoping to do and accomplish. And that will then allow you to kind of have the best match possible. There's a couple other things we put on here just in terms of kind of common kind of interview questions. We generally, you'll have some folks that will just want to talk generally about your resume and background. There'll be a lot of interest in why private equity, the industry as a whole is very entrepreneurial, and you really kind of need to make things happen, particularly in today's era of private equity, as opposed to waiting for things to come across your desk. So being able to articulate why you're interested and what gets you excited about it is really, really important. And then we've listed some other things here, but certainly people will always have interest in understanding how you think, and that can be very analytical, where you'll get potentially some modeling tests and case studies and things of that nature. And it can be more general, which is, I've certainly had situations when I was interviewing where people would ask simple things such as like, what makes a good business? So I think those are good things to be ready to be able to answer. I don't know, Sean or Bobby or Jess, I'm sure you guys have lots of other tips as well. So feel free to chime in.
Bobby, what was the most difficult question you got? Put you on the spot here. Unrehearsed.
Okay. So that actually, haven't thought back to that in a while. I think that's a really good question. The most difficult questions that I had, quite candidly, were regarding the deals. So this is something that I think is very good to emphasize, is that ultimately when you do go through PE interviewing, it's very important to come prepared to talk about a deal or transaction that you've worked on. But right, like not only knowing like the ins and outs of like, here are the financials, here are like these trends, like make sure you are able to talk and think through why this would be good or bad from an investment perspective. So that, to be quite candid, for me, coming from banking, was not really a mindset that I was accustomed to thinking through. But ultimately, like that is what we do over on the buy side. So I'd say that's probably the one thing that I found was the toughest type of question I received.
How about you, Jess?
I would echo that. I think that's a great point, Bobby. I think another hard question that, comes up during any private equity interview, what you're going to see is, exactly what Bobby just said, which is more of a point of view of the deal you worked on. Of, you know, if you come from a consulting or an investment banking background, you're very minute in the details, but taking a step back, having a point of view on, hey, is this a good investment? Yes or no, and here's the 4 or 5 reasons why. And being really succinct and clear in your answer, I think is one of the toughest parts of interviewing.
And I
Yeah,
think,
Stephen, I would go ahead,
go
Bobby.
ahead. Oh, no, I was just going to say, I think something that I found, just to build on our answers a bit, that I found was really useful, that I would also recommend for our audience here today, is definitely, to the extent that you can, leverage your network, right? Like any of your peers, any of your friends, anyone that you know that just recently went through the process, or perhaps any friends, peers that are on the buy side. Try and leverage them and have them help run through some of these questions, run through like a mock interview. Things like that are very helpful, because ultimately that helps gets your mind going in terms of thinking about things from an investment perspective, and not just purely, you know, speaking directly in terms of what makes up the company itself.
Yeah, Stephen, I was just going to say, I echo your point of view around authenticity. You know, broadly speaking, I think of interviews as being of two types, although certain interviews probably have both types in the interview. One, of course, is sort of more technical, where people really are looking for a answer. They're looking for a right answer, or trying to get a balance sheet to balance, or whatnot. But you know, most of the questions I ask these days are genuine questions to which I don't have an answer myself, and I'm genuinely curious what I hear back. And so my advice on that would be to be authentic, and you know, don't search for a right answer. You know, if you're talking about a business that you've worked on, or a deal you've worked on, or an experience with a certain executive, don't worry so much about reaching for the right answer, because I think odds are the person asking the question doesn't have a particular answer in mind. They really just want to talk to you, get to know you a little bit better, understand how you think, and as Stephen said, get to know you a little bit as a person, and sort out whether there's a good fit between you and the firm. You know, it kind of it's in some respects obvious, but we forget it. You know, by the time you get in front of, whether it's a firm like us or a similar firm, or frankly, a lot of other industries, you know, you absolutely have the qualifications for the job. You have the test scores, you've got the resume, you've got the pedigree, you've got the education. That's why you're in the room to begin with. So you have all the tools. And most of the time, people just want to get to know you and understand a little bit more about who you are, and why you're excited to be a part of, you know, a place like GTCR.
All right, so actually we're going, what we said we want to leave 20 minutes for questions, and I think it's exactly 2:40 Central. So
we want to leave 20 minutes for tough questions for Stephen.
Well, I've pulled up the questions here, which means I guess I will be the moderator. So maybe that way I get to dole out the questions this way. So let's see here. So the first question we have is, do you have advice on landing an interview entry-level opportunity in private equity, coming from a non-traditional liberal arts education background, but with some business experience through internships? I'd say maybe we just start, and Jess and Bobby, maybe we'll throw it to you guys first. Just talk a little bit about, you know, the process. It's obviously very competitive, but both for you personally and friends of yours who have had success, you know, what are some of the tips you would have for folks on the phone as they think about how to get their foot in the door?
Bobby, do you want to take this one, or do you want me to?
Sure, I can start off, and if you want to chime in,
tag team it. Yeah.
Yeah, sounds great. So what I would say to that is, assuming that the person who asked this is probably coming out of undergrad directly, I would say perhaps a good way to leverage that would be to first focus on getting it into, say, like an investment bank, a consulting firm. And in order to do that, I would say really it's very important to leverage any sort of network that you can, right? Like if you know anyone who works at a bank, call them, ask them about their experience, see if they have some time to hop on the phone, if they have any advice for you, like how to get your foot in the door, maybe like at their firm or at a different firm. And then ultimately, I think once you have the experience of investment banking, something finance, consulting, anything of that sort, I think it becomes a lot easier then to build on your skill set and then jump over to private equity.
Just to touch on that point too, breaking it down into, liberal arts background, no finance experience, I don't think that necessarily matters in terms of right under undergrad when you're going for a banking or consulting type role. In my experience, I've seen backgrounds from, they studied English to they've studied political science. I've seen the full gambit. So I don't think that's necessarily a hindrance. If you have both, hey, I don't necessarily have a ton of finance degree in my undergraduate, I'm at a corporate role now, but I would really like to be doing some more M&A focused work. What I would say is in your corporate degree, maybe, if you have a business development team, get to know them, talk to them about what they do, see if it's interesting, and see if you can get on some of those work streams in order to become more prepared and comfortable with the type of work that you'd be doing in a traditional private equity type role. That's another way I would say you could potentially angle it.
I mean, the last thing I would say is, we think about hiring people the same way we can think about going about finding companies to buy and executives to partner with. And you got to be tenacious. You got to be entrepreneurial, and I think you'll find across the industry, you'll earn a fair amount of respect from people if you can kind of figure out your angle. As I think Bobby alluded to, figure out kind of who somewhere that you can connect with and understand about the firm and what they find important or where they might have opportunity. And every firm is not hiring a lot of people, and so you got to cast a pretty wide net. But if you do that across a pretty broad swath of firms that you think fits your style well, I think that hard work, that entrepreneurial nature, that will pay off in the long term. It might not pay off in the first couple of weeks, but if you make it a focus and you go about it the same way we'd go about finding a deal or an executive, I do think it does pay off in the long term. All right, I'll push this one to Sean, and then I'll come back to answer it too. So here's a question more on the deal side. How do we determine between keeping current management and developing them versus bringing in our own team that we've had for a while versus partnering with a team at close?
Yeah, absolutely. I mean, look, we get this question a lot during fundraising, for example. It's a topic of a lot of conversation. And the way that we generally think about this is, first of all, if we're partnering with any team, whether it's an incumbent team that's running a business or not, it's a team that we know really well, that we've spent a lot of time with, ahead of a process, in many cases over years. We've gotten to know them and they've gotten to know us. And so instances come up, roughly probably 40 or 50% of our deals these days, where a CEO management team's running a business and there's an opportunity to recapitalize that business. They're looking for a partner to help them grow the business. And if we have a longstanding relationship with that executive team, it's great to be able to back those folks. But it's critical. It's critical to know them well enough, and not just know their reputation or know their track record. It's critical to know them well enough to know that the chemistry is good, and that we just think similarly about the industry and the business and how to create value. And then there's other instances where, we've partnered up with a management team. Stephen talked about Phil Spencer, but we've done it dozens and dozens of times. We've partnered up with a management team and we've developed a thesis, and we are together proactively going after acquisition targets in a space. And when we're doing that, we're really doing it with a purpose to back the team that we've locked arms with. So, both models work. They're a little bit different, but the commonality has got to be really, really deep relationship, professional, personal relationship. You have to know them very well. You and they have to share a point of view around where the industry is going, where the business is going. And you really, really have to, keep a high bar. You got to partner with folks that really, really know their stuff and have a track record of creating equity value.
Great. All right, I'll take this one, and then I'll, Bobby and Jess, you can get ready because you get to answer it after I do. So the question is, what draws you to PE? So the first thing I would say is that I would imagine that everybody on the phone, maybe Sean is the exception versus myself. He might have had it all planned out too, but I would guess everybody else on the phone has a much better idea of what private equity is today that is not yet in the industry than I had of private equity when I was not in the industry. I would like to tell you that, I had a grand plan, but it was much more of, I can remember back to, I was at Bain and Company Consulting, just kind of learning that industry, and private equity, this was 17 years ago at this point, was still relatively nascent, but it seemed like an interesting place where a lot of the people that I had a lot of respect for were interviewing. And so it felt like, okay, well, it's kind of sounds interesting and seems like something I should go do. And I would say as I got to meet people in the industry, I was drawn both to the people and how dynamic it was and competitive in a fun way. And also how much everybody that was in it felt very passionate about it. And so that drew me to it. And I think that's very true kind of once you're in the industry. I mean, I describe again it to people as kind of like the career trajectory. It's a continuum. You always, whether you're a first year associate or whether, you're a 10-year MD, you're always kind of on the edge of learning. And that's what makes it fun. You get to work with a lot of really smart and entrepreneurial people, and you're constantly kind of learning something new. And I think the day that you stop learning stuff is when it stops becoming fun. But most people that I've seen go through the industry, they continue to find ways to kind of push themselves, push their teams, and learn along the way. And that makes it feel less like work and more just like what you get up and do every day. Sean, would you add anything to that before we have Justin and Bobby jump in?
Me? No, I was, I kid you not. I knew absolutely nothing about private equity in 2000 when I somehow got an interview at GTCR. I think I actually had read an article in it was like Red Herring or IPO magazine or something about Hicks Muse, like in the middle of 2000. That was kind of .com and telecom, bubble, and which didn't end well at all. But I even more embarrassing, I think I even have mentioned in my GTCR interview that was my familiarity with private equity, was like reading an article in Red Herring magazine. I mean, it was, with the benefit of hindsight, it's shocking that I got the job. But you're right, Stephen. It's that doesn't really fortunately, that's not really dispositive when it comes to figuring out what your career trajectory is really ultimately going to be. What I think firms are looking for is people that are hardworking, excited about the industry. Obviously, have to have a certain amount of intellectual horsepower and intellectual curiosity, but they want people who want to work hard and who are willing to jump in with both feet.
I guess from my perspective, why private equity is, you're learning something new every day, especially when you think of, hey, you're going to be working on 2 new deals, or hey, you're working on this add-on with this company and you get to partner with the management team. it's really fun to see how much you can, put yourself forward and continue to gain both communication skills as well as really great modeling and Excel and technical ability. That just continues as you progress in this job, which is something that's really unique, I would say, at a certain point in a career, 3 or 4 years out of undergrad.
Yeah, and just to build on what all of you guys have said, I think you really covered the full gamut. But I think just for me personally, what really drew me to PE is the fact that just thinking back to even when I was a child, like I've always asked the question why, to the point where it bothered my parents to the max, right? I would always ask like, why this? Like, why does it work this way? So I found that very much in PE, right? It's an industry where you're always learning, you're always trying to figure out like, why does it happen this way? Like, what like is causing this? And is there a way where we can, like, is there any improvement that we can make here? Like, what sort of leverage can we, I don't know, whatever. I don't want to get too detailed into it. But long
You
story
can see her
short,
passion jumping off the screen.
long story short,
Yeah.
it definitely is a space where if you find yourself to be like a curious person that likes to be creative but also analytical at the same time, I think it's
and just plugging
really all
GTCR
those.
for a second too, echoing what Bobby said, this is a really great firm and differentiated in the market, especially from an associate and VP experience, to the extent that you get leeway to step up and take on more responsibility to the extent you're ready for it and it's there for you to take, and people are really appreciative of that. So it's a really great place to learn within private equity as well. Just plugging our green colors here for a second, echoing what everyone's saying. But
That's fantastic. All right, so this question is addressed specifically to Bobby and Jess. So Sean and I are not allowed to answer. It's also become clear that Sean and I stumbled into private equity, so we were not that thoughtful. So what were the main reasons that drove you to transition to PE, and what other career paths did you think about?
Me personally, I thought about venture capital for a while versus private equity. The way I initially got here was, and Bobby and I both did our investment banking analyst years over at JP Morgan. So we worked with a lot of private equity firms, either buying or selling. So I kind of got used to that role of, okay, I'm working with this associate. This is what they're going to be doing. I'd be interested in this. But I also thought about venture for a while of, hey, maybe I want to do some more early seed, early business ideas. I think what ultimately led my path to private equity was I realized venture would be more, a little bit going out, finding, sourcing, creating relationships, versus what you're going to see in private equity or a traditional buyout shop is more very analytical, financial driven, thesis driven, industry research driven than you might see in a different role, which is why I decided to go the more private equity route. I don't know about you, Bobby.
Yeah, I mean, I think for me, very similarly, I started off at JP Morgan in investment banking. And I think very, very early on, I realized that as much as like you definitely learn a ton in investment banking, which is, it's a great industry, you learn a ton, you get a ton of exposure. For me, kind of like I mentioned earlier, I did want a little bit more of the analytical side. And then thinking, between VC, PE, the gamut. For me, I chose private equity for a couple of reasons. One being obviously just the analytics of it rather than the people sourcing or whatnot. But also, I like the fact that in private equity, I think Sean mentioned this earlier when he was talking about the leader strategy, is that there is a lot of opportunity for PE shops to come in and create value after the companies themselves have hit, like their capacity, right? So for us to be able to come in and try and create this new value and partner with the team, help the company grow it, and just create something new, that to me was a really exciting kind of idea, concept that I wanted to be a part of. So that's ultimately why I chose private equity.
Great. All right, we're starting to get short here on time, so there are two questions here I'll wrap together. The one was a question about how we think about coming from a banking or consulting background, and the other question is around transitioning in if you don't have into a sector when you don't have experience in that sector. So I'll take that one. You guys can chime in. I'd say first, yeah, the industry in general hires from both the banking consulting side, and I think there are skill sets that you learn at both a right out of undergrad banking program and right out of undergrad consulting program that you need to be successful in private equity in the long term. Obviously, you've got a good mix on the phone of, we've got two of us that came from the consulting side and two that came from the banking side. The way that I think about it is kind of whatever side you come in, having come from into private equity, you know, there's going to be a bit more of a learning curve on the other side. But the reality of it is, as we've talked about, kind of the whole career is a learning curve. And so whether it be over that first year that you got to spend a little extra time modeling to get that, you know, down pat, or whether it be that you try and kind of get your arms around a couple more of the kind of deep diligence activities to understand more of what you would have been doing if you had come from the consulting side. You know, over time, I generally say those things balance out. And I'd say it's similar on the sector side, which is, you know, it's funny, I'll interview people for tech and they'll say, well, I've never been in tech, or if I accept a job with tech, like, do I have to do tech my entire life? And the answer to that is no on both of those. One, most of the people that we're hiring in as associates are not coming into industry groups where they were in an industry group at a bank or a consulting firm before that was the same, right? We're looking for people with all the traits we talked about. As you notice, we never mentioned kind of industry expertise at that level. We expect you'll learn that industry expertise over time, but not that you're coming in with it. And then to go along with that, you know, you may come in and you may have a tremendous 3 years in healthcare or tech, and at the end of it, you may say, look, I like the firm, but I don't necessarily like that industry. There's another one that interests me, and I would not. You shouldn't feel like you're going to be wedded to, you know, whatever you kind of come in and pick first. I mean, if you go back to, and industries change a lot, right? 20 years ago, tech and healthcare looked very different than they look today, and so you should think about it as an opportunity to come in, get your arms around the sector for a couple year period of time. You'll learn way more than you could have ever imagined about that sector. But then you'll always have the opportunity to kind of use that to move to an adjacency or into something else, and you'll learn a lot along the way. So there we have 1 minute left. Let's see here if I can find kind of one more good kind of capstone question. All right, we'll go around the horn. If you get 2 to 3 words to describe as you're interviewing a candidate, kind of 2 to 3 words that would jump out on a word wall as kind of key characteristics or traits you're looking for when you interview a candidate. We'll leave with that. And since you can't repeat something that the person before you said, I will go with the advantage of going last. I'll let Bobby start, and then we'll go to Jess, Sean, and myself.
Okay, a couple of words. One word that stuck out to me earlier that Stephen mentioned was eager. And another one, just to literally steal all of your words, Stephen, is authentic. I think those are 2 very, very important characteristics, along with just showing that you have some sort of an analytical mind or curiosity. Those to me would be 3 traits that definitely would stand out to me in a candidate.
Piggybacking off of that, I would say, you know, being humble and then being tenacious would be the other 2 words I would describe.
I would say probably the things that I look for being honest are ambition and intellectual curiosity. Technically,
Sean, intellectual curiosity is two words, and I was thinking about using that one. But
you can hyphenate it. You can hyphenate it.
Okay. Now I gotta think of another one. So, you know, maybe I'll finish with one, which is fun. I mean, we all, it's an industry where you work very hard. We all want to go to work with people every day, whether it be in person or over Zoom, that, you know, are generally good people and that we enjoy as much hearing about their families and what they're doing, you know, as we do grinding it out on the next deal. And so that kind of ties back to a lot we've talked about, authenticity, et cetera. We want to put a group together that we can have fun with and enjoy coming to work with every day. So I guess with that, we'd say thank you all very much. Everybody stay safe. And you guys know where to find us. If you have questions in the future, we're all happy to talk and email and be helpful. So
Absolutely. Yeah. Thanks again to Wave for including GTCR in this. We really appreciate it. It's a great organization. Made a lot of strides over the last bunch of years, and we're happy to be part of this. Thank you.